may be a new trading week, but we have new record highs for the Dow Jones Industrial Average. In midday trade, we're seeing the equity averages hit flat, but we do have a lot of event risk coming up. So joining me now is Peter Cardillo for Standard Financial. Peter, great to have you here.
Good to be back.
Well, we have to keep in mind that it is August and volumes are going to be light, but we did get the U.S. jobs report, and this week we have Fed speeches as well as inflation figures. So what do you expect to hear from the Fed?
I think we're just going to trade sideways. You know, the market has been so strong and making new record highs almost on a daily basis. It's basically just feeding on itself. And you can see today's market action that the market, while the Dow did make a new high, is beginning to retreat somewhat. And that's due probably to the lack of volume. So, last couple of weeks of August, probably we're going to see more and more sluggish volume. And of course, then the markets are going to begin to look forward to the Jackson Hole conference, and it'll be the worries of the Fed all over again.
And indeed, given that we don't have that much to go on in between the Fed symposium and last week's jobs report, people are starting to look ahead to that, as well as some of the Fed comments. But given what we're expected to see in terms of rate differentials going into the rest of this year, how do you expect that to play out?
Well, I think in terms of rate differentials, I think the market will begin to reflect the fact that the economic numbers are stronger than what we've been looking for in some cases, obviously. And the stronghold, obviously, is the labor market. We had a strong report on Friday and consistent, of course, with jobs growth. And today we saw that also in the employment trend index, where we saw a big jump from the previous month, which had a negative reading. So it all falls into place to what the Fed has been saying all along, that the jobs market is tight. It's getting tighter. In fact, we're at a point where the jobs market is so tight that it really can't get much tighter than this.
And last but not least, Peter, since I have you here on a Monday and we have OPEC members meeting in Abu Dhabi, I want to get your take on what we've been seeing in the commodity space, also in oil. Today we're seeing Brent WTI off about 1%. But given where production is right now and inventories, for the rest of this year, what do you expect?
Look, make no mistake, the market is rebalancing. It's just a question of time before the market is fully convinced. What we're seeing today is, I think, just a normal pullback, a technical reaction. The market had a big jump, went over 50, couldn't hold that, came back down, and now it's reacting to that. And I think the market wants to hear some real strong language when we have the OPEC meeting in full gear again. And I think once that happens, I think the fact that, look, if you look at the inventory numbers on a weekly basis, they've been going down. Last week we saw the numbers actually do a little bit better than the private forecast. And so it is beginning to rebalance itself. It's a question of time. I stick to my prediction that by year end, we'll probably see prices closer to between $60 and $65 as opposed to where we are now.
Okay, Peter, well, thank you so much for joining me today. And as always, thanks for your insight and analysis.
My pleasure.